to another really important video in which I'm gonna introduce you, and I'm gonna let in few of my own experiences and secrets which I have discovered in my trading journey. And this video is going to be quite a wordful, and it'll be a long video, so if you're easily bored and you lack focus, do not watch this, and do not skip anything in this, because everything in this presentation of mine is meticulously chosen, and it took time. So I want you to snap out of any distractions, any particular thing which you're doing. Take your notepads, pens and everything, and let us start. Alright, what is CRT? Well, it states that every candle is a range. What does it mean? Every candle, not a bunch of candles, not a consecutive multiple candles which present as an order block or a supply zone or a demand zone. No, it states that every candle in itself is a range, the highs of the candle and the lows of the candle. So every candle ranges highs or lows. Once turtle souped, you need to look at the opposite range or opposing range as drawn liquidity. In this example right here, this is the range. All right, it can be anything. It can be a weekly time frame, and you should know which weekly chart is this. And this is the weekly. This can be the daily. This can be the 4 hour, 1 hour, 15-minute, anything. All right, one side of the range, once it's taken, turtle souped, right, it is the precursor that your drawn liquidity shall be the opposing range. It's as simple as that. Suppose in a week, okay, this is the whole week. Next week we turtle soup the previous week. Our eyes should directly draw on the third week towards this low right there. All right, every function should be above or below the open of candle which you choose to trade. What do I mean by that? If you choose to trade the advance entry, candle number 2 right here, which is the candle which turtle soups the first candle. All right, so if you choose to trade this one, your entry shall be above the open of this candle. All right, it should not be that you missed one entry and then your entry is below the open of the, like, let's suppose there is a breaker block or a liquidity void you want to enter from. Once again, it shall not be below the open. All right, because this is an advance entry. The third one, of course, anywhere above the open of the third candle, anywhere above, if you find a PD array in this candle, let's suppose you find an FVG or a breaker block aligned with an FVG, the unicorn. If you find this in the above the opening of the third candle, you shall enter from that one particular PD array, or it's up to you which PD array you choose. It is the peak of technical analysis, meaning this is everything. In my understanding, this is everything. After all, the journey which I took to learning everything, this is the most practical, basic and efficient way of understanding technical analysis. Most practical form of determining bias and the drawn liquidity, and it is something which I have already shown over here. Meaning, the moment you take the high or the low, your eye should directly draw to the opposing range. In this case, we took the high. Our eyes are drawing where? To the low, right? We are looking for our entry functions above this. It's as simple as that. You don't need anything else. You don't need your indicators. You don't need all those stupid concepts which you follow, all those patterns or anything. Patterns you have to follow, but on the lower time frame. That's the understanding of price action at a higher time frame key level. The price action at the lower time frame, all right, at a higher time frame key level, of course. And in CRT you can trade the second candle or the third one, the third being the quickest. It is the most, it's a rapid move, right? It does not stop. It's the, because it's the distribution candle. Suppose this is Monday. Monday forms a range. Tuesday, turtle soups. Monday. On Wednesday, during London or New York, you see the high of the day into the into a particular PD array which was formed on Tuesday. All right, and then your stop loss is above here or right at the top, and you target the Monday low. As simple as that. All right, let's go to the next one. Now these are the two forms of CRT. Okay, the first one is a candle is turtle souped, meaning this is the range. Suppose it's a 4-hour range. Turtle souped targeted the opposite range. All right, another form is a range, a candle is traded through. Okay, it's traded through and then it's flipped, it's used as resistance. Look at this, we have a candle over here, we have a 4-hour range, the opposing range we could not turtle soup. All right, we did not turtle soup it in any form, and then we closed below, and now we are using the low of the candle as our resistance in the classic support and resistance term, meaning all these buyers are stuck over here. They saw that this one big beautiful candle, all right, they want to buy. They started buying. They were smart one was selling, and this one final push right there, and then dumped. Now they're all stuck right here. So these are the two scenarios. This can be applied on anything. This, instead of this being a 4-hour candle, you can imagine that this is a daily candle or a monthly candle or a weekly. All right, it can be anything. This as well. So don't just limit yourself to one particular idea. Instead, think of it like, use your mind and logic, that this can be any particular candle. This is not only a 4-hour candle on a, because time is fractal, price is fractal. All right, so anything which you see on the higher time frame, it will be the same thing will be happening on the lower time frame and on the higher time frame above the current time frame. All right, let's go to the next one. So this one is my favorite model actually, which is the 4-hour range and the entry on the 5-minute candle or the 5-minute time frame. All right, here you go. The first point is the key level. Now I want you to focus once again that these key levels, okay, these are higher time frame key levels, meaning 4-hour, maybe 1 hour as well. Okay, but 1 hour only if it's time based. If it's not time based, I do not use the 1 hour. Listen to that once again. 1 hour order, 1 hour key level, if it's time based, meaning this order block is formed at 9 a.m. previous day, okay, then I'll use it. This rejection block is formed at a particular time previous day, I'll use it. This FVG is a in the Q3 of previous day, I'll use it. All the highs and lows, etc. But if not, I won't use the 1 hour. I'll use the 4-hour order block, rejection blocks, FVGs, all the highs and lows, weekly, monthly, and daily, of course. All right, remember these things. These are your key levels. Okay, if you do not know the PD array matrix, you should go and study the PD array matrix, because I did not mention a breaker in this as well, because a breaker can be a key level as well. All right, 4-hour candle range is formed, 5 a.m. candle range is formed. We have a key level right there. 9 a.m. comes, opens, goes below, turtle soups. 1 p.m. expands. Entry on the 5-minute time frame, I suggest that you use 15-minute as an order block entry. If you're extremely advanced, you use the 5-minute. I personally use the 5-minute order block, or CISD. Okay, either one, order block, you're changing the state of delivery, your IFVG. If there is an FVG over here which flips into an IFVG on during the particular time over here in this candle, you use it, and the breaker block on 5-minute. And remember one thing, that if there is a breaker and if there is a fair value gap beneath under the breaker, that fair value gap is it's likely that it will be filled. All right, so once again, key level, higher time frame, 4-hour, daily, weekly or monthly, 4-hour candle range, 5-minute order block formed after the purge of the previous candle. All right, this candle, once it's purged at 9 a.m., you look for all these patterns. These are the patterns which I'm mentioning. Okay, you'll see examples in the next few slides. This is one example. All right, 4-hour range. Our daily order flow is really important as well, guys, because you have to know the bias, and I'm assuming that you've already kept that in your consideration, that your bias is really important to any trade idea or narrative. All right, 5 a.m. range, right here, 9 a.m. purges at a key level, which is an FVG, old FVG. In this example, I've used an FVG, but it can be anything. 5-minute entry, CISD or the order block, and then target the opposite range. Right there is the example of the previous slide. All right, we have a range over here. You can see this is the high and this is the low. The key level you can see below is the FVG. All right, now over here you see this IFVG which I was mentioning. There is an FVG in this manipulation leg. All right, this is the manipulation leg, this is the FVG. It failed to flip right here. You can see where my cursor is, right? It failed to flip. We went down once again, and then we moved upwards with displacement right there. Now we succeeded to flip the FVG into an IFVG. All right, there is a change in the state of delivery as well, order block. So everything is in line along with time. You'll see about time in the next slides as well, but this is just the eye training for the entry. Okay, remember this: manipulation leg, move up, down to close above the IFVG, right? Close above the FVG and above the order block. Entry at the order block, stop below the low, and we target the 50% first, take partials at 50%, and then let the remaining trade run up to the high of the 4-hour candle. All right, now this is the example. You should know which example is this. This was very recently formed. All right, so in this one particular scenario, we have a key level over here, which was the daily rejection block. All right, I did not mention over here, but because it would have been too much. So key level, just understand, because I've mentioned in my previous slides, we form an FVG right there. It's a bullish FVG. All right, at a particular time we turtle soup this range right here, this high. All right, we turtle soup it, close below. Next candle closes below the FVG. All right, if you see that this candle did not close below the FVG and did not close flip it into an IFVG, you would have most probably seen another purge of this wick right here. So this turtle soup would have been turtle souped once again. I want you to pay attention, everyone, and make sure that you're listening to every single thing which I'm saying. If this FVG was not flipped and it was respected, you would have seen another purge over here, and then this FVG would have turned into a IFVG and there would have been a breaker. All right, but since it's formed already an IFVG, there was an SMT with the correlated pair over here. All right, I'll make a video on SMT as well. You close below, you use the IFVG as an entry point. You can see here. Understood? So remember this when you're looking at the charts. If you see any particular FVG flipped at a particular time, use it as your entry point. Now, what do we have here? You'll be saying, oh my god, what is this guy saying? He was explaining to me the CRT and now all of a sudden, look, oh, where did he take us? This is something which I have actually incorporated into my own training to understand CRT more. And why is it important? Because this is nothing. No charts are there. This is time. This is basically time. This is your Asia session Q1. This is your London session Q2. This is your New York session Q3, and this is your PM session Q4. All right. Do not trade this. You do not have anything to do with this as a beginner or intermediate, because I don't do anything in this. I ignore it. I look for my trade ideas to form right after the opening of Q2, which is the true day open. All right, you'll see price hovering around above or below a key level or any particular PD array. Key level is basically a PD array, guys. All right, so you'll see price hovering around here and there. You'll see during the London session, you'll see either a manipulation towards the downside or the upside. All right, and I have noticed one thing as well, that the actual manipulation, it keeps going in from Q2 to till the opening of Q3. The Q3 of Q3, meaning the third quarter of the third quarter, because at that time we have London close and New York session overlapping, so we have major liquidity in the market. All right, so this manipulation which you see over here, right, it actually runs all the way up till the third quarter. This red box you see down here, which is the quarter 3 of Q3. All right, so you'll basically see at this time, you'll see your entire CRT model working. Okay, you can directly enter at the turtle soup over here with stops right like 5 points or 10 points above, and wait for a displacement below, re-enter at the breaker or an order block, and then follow the continuation. But remember the time. Do not remember the worry about the pattern as of now, because this one particular slide is about time. Forget about this. Trade this one, and if you find a re-entry in this, a continuation, trade this one, because Q4 is either the reversal or the continuation of the previous cycle. You understood? But remember, everything revolves around time, and as your technical analysis, you're only going to use CRT, nothing else. A clear depiction of what I was speaking of in my previous slide. All right, accumulation Q1, manipulation Q2, distribution and reversal or continuation. You can look at the time, mark the 6 p.m. candle towards the 6 p.m. candle of the next day. So Sunday 6 p.m., Monday 6 p.m. In between, this is your daily range. All right, everything happens. This is the accumulation. This is London. All right, this is the true day open. Now, if you want to be a buyer and in this day, all right, you're looking for buys, always remember to buy below the true day open. True day open begins from Q2. Q2 starts, true day open begins, meaning the midnight open. All right, make sure you're if you're selling, you're above the true day open, which is the premium. All right, if you want to buy, you're buying below the true day open, which is the discount. You look for continuations or distribution candle in this zone right here. All right, but like I mentioned, the manipulation can last all the way towards the open of the Q3 of the Q3. This is the Q3 of Q3, guys. All right, I'm going really slow so that there are no confusions whatsoever. All right, and this is the Q4. I suggest only focus on this one, because this is either the reversal of the previous cycle or the continuation. All right, depending upon the algorithm and how it works. See, this is the chart example of what I was explaining about. Q1 accumulation, Q2 slight manipulation. Manipulation ran until when? The beginning of Q3. And you can see this red box over here. This is the Q3 actually of the week, which means it was Wednesday. And you should know which chart is this. If you're really keen on understanding and you're really focusing on the charts daily, you should know. So this was it, right? Accumulation, manipulation runs all the way up to the open of the third quarter of the day. Let me repeat that once again. Q2 opens, runs all the way to manipulate until the third quarter of the day. All right, and the moment Q3 starts, you can see the distribution right there. There is no stopping, it was just spooling. This is what ICT calls as spooling. There is no like return, no point of return in this, apart from these tiny little wicks you see up, and over here I don't see anything as well. So that's it. Now you can see this line, the true day open here. Your bias is bearish, you're selling above the open. All right, you can see this FVG was flipped over here, and then it never came back because of the rebalancing of the FVG right there. All right, so it's rebalanced over here as well. The price delivered higher and then dropped lower and then delivered higher again. So this one particular PDRA is balanced. So yeah, this is X meaning either it can reverse or continue, but in this case you see it just accumulating once again. So let's move on. Now few protocols which you have to follow in order to choose the right CRTs and everything. Look at the daily order flow firstly. If the daily order flow, if bullish, only look for bullish CRTs. All right, if you're bearish, look for bearish CRTs. That's as like clear as the sky, this message. If your daily order flow is bearish, you're going to look for bearish CRTs or pop above the old highs. All right, mark out the daily, weekly or 4-hour key levels. All right, wait for a 5 a.m. range to form, then purge should occur after 9 a.m. all right, 9 a.m. opens up, there shall be a purge. If you are bullish, you should buy below the true day 8:30 a.m. 9 a.m. low. All right, if you're bullish, you should be buying below the true day open, the 8:30 open and the 9 a.m. open. You should look at this and go through your charts and verify this thing, and vice versa. If you're bearish, wait for CISD, meaning the change in the state of delivery on 5-minute, or an IFVG to form or a breaker to form. All right, and if there is an FVG in the manipulation leg, this is what I explained in the pictures before. If there is an FVG in the manipulation leg and it does not flip to an IFVG, expect another purge. All right, and breakers also, they stop the gaps to be filled. Suppose there is a breaker already formed, the price just delivered towards the upside, and a breaker is there. Beneath the breaker there is an FVG, then that FVG is highly likely to be filled, because the breaker will be there is a unicorn actually, if you know unicorn model. It's really successful as well. And always partial at 50%. Manage your trade actively. Do not just leave your trade open and then go look for somewhere else. That's the protocol for price. All right. Next is protocols of time. This is something new, right? Understand that price is subservient to time always. If you do not follow this thing, you're gambling your money away. You might be lucky 2, 3, 10 times. The 11th time you will be unlucky, and that unlucky moment will be worse than the whole wins which you had. Every quarter has its own 4 quarters. Okay, so like I said, from 6 to 12 is the third quarter. In that third quarter we have 4 different quarters. Let's suppose Q3 of Q2, which I mentioned in my previous slides, is important, which is from 3 a.m. till 4:30. Make a note of this time. Do not trade blindly. Make a note of this time. Q3 of Q3 is important from 9 a.m. till 10:30. You'll see a purge of look for CRT purges at the times mentioned above. These are the times when you shall be looking for purges. All right. 3 a.m. basically, if you're a London trader, you'll see a purge occurring at 3 a.m. either of 1 hour CRT or a 4 hour CRT. All right. IBDA data ranges must be followed for time-based drawn liquidity. These are the protocols of time. Make sure you respect this so that it respects back. So these ranges must be followed and marked on your charts so that you understand the drawn liquidity. If your model forms outside of proper time, it's a trap. You see everything forming perfectly, right? Like there is a purge at some particular time, and then after 4:30 or 5, suppose, after the kill zones, and you see your model forming and you say that, okay, yeah, it is there, everything is there, my risk management is there, I want to take a trade. It's potentially a trap. It won't work out. And look for PD arrays formed in the Q3 of previous day or week as high probability key levels. Read that once again, the last point of this slide. Look for PD arrays formed in Q3 of previous day or week as high probability key levels. This is something which I want to make another video of, but I already have a video on this, right? Q3 of previous day, meaning let's suppose you have a 9 a.m. candle formed. Okay, in that one particular candle, 9 a.m., there is an FVG. Next day you are bullish, you wait for the 9 a.m. candle of the next day to drop into the 9 a.m. candle of the previous day, into the FVG. That becomes a high probability key level. All right, so I will make another video, but I already have videos on this, so you should go and check out. Few entry examples in my next slide, and you will see what I'm speaking of in the next video. This thing right there, we have a high, 4-hour high, we have a 4-hour low right there. Okay, this is Q2 accumulation right there. The manipulation starts over here right at the Q2 of Q2. All right, then we drop below into the third quarter of Q2. We form this order block right here, this order block. You can see there is a tiny little FVG right here, and you can see we flipped it, we closed above it. There is an FVG, we closed above, we came back, and right there you can see this one particular order block, it was the reason for the whole move. And here you see the kiss of death, where right in the Q3 of Q3, see, beginning, liquidity, sweep, kiss of death, boom, towards the drawn liquidity right there. Your entry was here, right there, your stop below the low. Now, if this FVG was not flipped, all right, if this FVG was respected, you would have seen another purge right there. I'm repeating this so that it can stick to your mind. Okay, another example. We have Q2, Q3. Okay, we have a range here. Range is purged right there. We have a order block right there, which was formed in the Q3 of Q2. Remember this, Q3 of Q2. Any particular third quarter of any quarter, fourth or first, anything, it's really important because the PDRAs which form in these quarters are really high probability. All right, so you see the candle, the range purged, order block formed, we trade above, all right, we come back once again towards the order block, we do not close below, or we do not tap it, like take the order block out, and we keep on moving. And right there you can see the kiss of death right there, third quarter. Price moved above, kiss of death, moved quickly towards the drawn liquidity. All right, so I was planning to do this for a very long time. I wanted to make sure that I present it properly because I wanted to let you guys know that if your stop losses are being hit again and again, you are missing this part, these boxes which I've mentioned over here. Q2, Q3 of Q2, all right, Q3 of Q3, all right, important place, really important place. So I'm sure that you guys took some notes, and I know there are a lot of things which are missing in this, like the formation of SMT, sequential SMT, and I guess the involvement of IBDA, quarterly theory, and everything. But I wanted to keep it as simple as possible and a direct and practical approach in this. All right, so whatever questions you have, you can ask me in the comment sections, and if I made any mistakes in this, I want you to point it out. All right, so I thank you all for watching, and I wish you good luck and good trading.